This is the Borderless Crypto Podcast. Hello everyone, I'm your host, George Manilov, and in this series I bring you exceptional entrepreneurs, investors, hustlers, and thought leaders from the cryptocurrency and fintech space. In this episode, I meet Daniel Shin, the co-founder of Terra, a truly fascinating stablecoin and payments network project, which is backed by some of the biggest crypto VC funds. Terra is unlike any other stablecoin you've seen. They're not about trading, but they're about actually spending in the real world. In this talk, you will learn how you can save up to 10% on online purchases with Terra, how Terra achieves price stability without being backed by real-world assets, how the Terra stablecoin is better than Facebook's Libra, and how it can grow cryptocurrency adoption faster than Facebook, and finally, how you will be able to get a high-yield interest with Terra on Nexus interest earning account. Please note that anything that I or my guests say in these talks is for informational purposes only and should not be treated as investment advice. And although during daylight I'm part of the team behind the crypto lending platform Nexo, at night, when I do these talks, I share only my personal thoughts, which in no way represent Nexo's opinions. Now it's time to get the podcast started in 3, 2, 1. Daniel, I'm super excited to have you here on the podcast as well, researching Terra. I've been really impressed by the different approach in which you look at the stablecoin space and how Terra is being built, and particularly about the way you plan to grow Terra for actual mass usage. But before we jump more deeper into Terra, could you please share a little bit about yourself, your background, and how did you got into the cryptocurrency space?
Yeah, absolutely. Super excited to be on this as well. So thank you, George. Yeah, I think I've been a serial entrepreneur for the past decade or so. So in 2010, I built a company called Timon, which is now a leading e-commerce company in Korea, used by about 20% of the Korean population. And we do about $3.5 billion in transaction volume every year. Also in 2012, I co-founded a company called Fast Track Asia that takes new and brilliant ideas from US and other parts of the world and localizes them to the Korean market. So one of our key portfolios is, for example, Fast 5, which is a local version of WeWork. And we also built a company called Fast Campus, which is a Koreanized version of General Assembly. So yeah, I've been building companies for the past 9 years. And the reason why I jumped into blockchain is probably for more practical reasons than most others. As I was running e-commerce, which is a razor thin industry, I noticed that we were paying 2 to 3% of all of our transaction volume to credit card and processing fees. So that ended up being $70-80 million, close to $100 million a year in cost out the door. And I felt like blockchain is a technology that can allow us to help reform that and allow e-commerce companies to reinvest more money in bettering the customer experience rather than unnecessarily paying credit card businesses.
Okay. And so then what was the process? Because you're essentially, for the listeners, you're building your own stable currency, your own blockchain. So what was the process and how did it evolve?
Yeah, so I got together with my co-founder, Do Kwon, who has been a systems engineer for several years. And basically, when I started Terra, I was a bit naive about how this could work. So, I said, try to deploy blockchain on e-commerce. I already have access to tens of millions of users and see if we can save costs. But what we realized is, number one, in order to facilitate payments, we need a stable form of currency And it just so happened that most currencies that were already listed were highly volatile in price. And so that happened to be a component that we needed to address. Second was most of the mainstream blockchains like Ethereum were way too slow to process the transactions on Timon alone. So we needed to build something that was a lot faster, a lot more scalable. And that allowed us to get into investing in our own blockchain. So ultimately, just taking a step back, we looked at the projects that were of high profile at the time and said, hey, look, like these cryptocurrencies are essentially serving as equities in the project. So if you think the project will do well, the prices will soar. If you think the projects will do poorly, the prices will plummet. But they didn't have the qualities that make it a fundamental currency that you can use as a medium of exchange or a store of value. So for us, we said, okay, let's build a stable currency that's distributed by e-commerce across Asia and give consumers a tangible reason to switch over. And that should contribute a lot to the burgeoning blockchain economy.
All right, makes sense. And then with this prelude, then could you please explain what is Terra and how is it different from the other established stablecoin projects, right? Everybody knows about Tether. There's already way more legit projects out there in the space. TrueUSD has been here on the podcast. Pax, we've seen, fiat-backed stablecoins, algorithmic stablecoins, or attempts of algorithmic stablecoins, and DAI with its crypto-backed stablecoins. So how does Terra compare to all of this?
Yeah, I think couplefold. So we like to introduce ourselves as a blockchain-based payment network. So stablecoin is a very important component of what we do, but that's not the totality of what we're trying to accomplish. So on that note, I would say the biggest difference between us and some of the stablecoins that came before us is that we have an extremely powerful go-to-market strategy. So we have what's called a Terra Alliance, which is 25 e-commerce companies across Korea and Southeast Asia that, with some of them being unicorns in their own right, that have all agreed to push Terra and its payment network to its consumers when the time is right. And they're pushing it to their consumers because, like I said, we're saving them millions and millions of dollars on every transaction every year. And what that allows us to do is, like Alipay did with Alibaba, really piggyback on a growing e-commerce market to first capture tens of millions of users. And that allows us to build liquidity pools across many countries in Asia. And thereafter, we can really build other decentralized finance features like credit or investments or remittances and so on and so forth. So I guess you can think of it as we focused a bit more on go-to-market strategy because we felt like, number one, millions of customers using it, and number two, the currency being tradable for goods and services across the world is a fundamental requirement for a stablecoin to succeed.
Absolutely. No, I actually absolutely love this approach that is really different from, let's say, TrueUSD, USDC, USDT, Pax, or all the other fiat-backed stablecoins, which are essentially the real biggest and probably only use case today is to trade and to, trade crypto and then have a stable alternative, which you use as a tool. And although at the moment I started thinking more of stablecoins, I thought this can be great for remittances, this can be great for commerce. They're not really used for that. And so you go the other way around where, because you have the customer base, you say, let's start with actual usage for buying and selling goods and services. And I guess later on, possibly this could naturally evolve into Terra being also used as a stablecoin for trading, maybe.
Yeah, absolutely. We think trading pairs on exchanges is a legitimate use case, but
sure,
at the end of the day, it's a very, very niche use case. So the way we thought about it is piggybacking on e-commerce, which is not only multitudes larger than the trading pair use case, but also one that happens to be growing at double digits across many of the developing countries, is one that allows us to drive mass adoption very, very quickly. And once we are tradable for goods and services in lots of the countries that we operate in, that actually significantly adds to the stability of the currency itself. If you know that you can take a Terra and buy computers with it, buy clothing with it, buy diapers with it, or whatever it may be, then that adds legitimacy and real value to the currency rather than it being simply market made on an exchange.
No, absolutely. That's, and that's a lot of what mainstream people say, people who are not into crypto yet, they say it about Bitcoin, but I could say the same for USDT, why accept Bitcoin payments when I cannot go to the store and that Bitcoin to buy stuff, right? Now, why did you not choose, because you also have this major difference with most existing stablecoins that they are, let's say, USDT, which set the example, and most of them after USDT, they have supposedly one US dollar or one fiat currency backing up each of the stablecoins out there. Why didn't you go for this way where you just create a stablecoin that is, promoted across your e-commerce system and that is simply backed by fiat currencies, and you chose an alternative approach?
Yeah, that's a great question. And obviously, fiat-backed currencies are the easiest to create. So we thought about that in our brainstorming. But I guess the simple reason is going back to our discussion on use cases. On exchanges, because every other currency was extremely price volatile, having something be stable in and of itself was valuable. But if you look at e-commerce or the real economy, where you have the option of using credit cards, you have the option of using, bank transfers, or simply using cash, and they're all stable, having a digital stable currency in and of itself is actually not useful. So we needed to think of a way where we can actually tangibly incentivize users to switch over from their incumbent methods to the new one that we're proposing. So it's a good segue to get into how Terra works. But basically, Terra uses a elastic supply to control the price. So if demand for Terra goes up, obviously there's upward pressure on the price of Terra, and we increase the supply of Terra to bring the price back down. If demand for Terra goes down, then we conversely buy up Terra and burn it to bring the price back up. So again, the elastic supply is what's keeping Terra to its peg. The interesting component is that as we integrate with more and more e-commerce companies, we're able to drive upward demand in Terra, and that allows us to increase the circulating supply of Terra. And that in economics terms is generally called seigniorage. So we take that seigniorage and we reinvest that into giving discounts on every purchase for the consumers on these e-commerce platforms. So you would go to the checkout page and you'll see options like, pay with Terra, pay with PayPal, pay with Visa, so on and so forth. But Terra method will be 5 to 10% cheaper than any other method that you can pay with. And that will allow more people to select Terra at checkout, which puts upward pressure on the demand of Terra again, which allows us to increase the supply, which allows us to then print even more discounts. And this virtual cycle allows us to really drive growth of Terra's economy.
That's really fascinating. That's what I love about your approach. So essentially, you're making it a no-brainer decision for the end consumer to choose paying with Terra, using Terra instead of any other payment option simply because he saves money.
Yeah, because ultimately payments is a process that takes like a matter of seconds, right? So you can only be so much more convenient than the alternative in today's world. So we think the most tangible benefit you can give to merchants is cheaper payment processing costs. And the most tangible benefits you can give to consumers is discounts. And we've designed the model where we're able to do that on an ongoing sustainable basis.
Okay, let's just go just a little bit back, and because I want to make sure that everyone understands how this works and why you're able to provide this discount. So essentially you're saying that you have elastic money supply, which in a way means flexible money supply. So the more people want to use Terra, need Terra, there's a greater need for Terra. You essentially create more Terra, or you print more Terra in a way, right? For in colloquial terms. Is that correct?
Yeah, it's not a discretionary decision. It's all algorithmic
Sure.
and automatic and transparent. But yes, that's correct.
Okay. And every time you print more money, which is mathematical, algorithmic, is not like a central bank where they decide whatever we're going to print this amount of money. Every time the system calculates that this amount, a certain amount of Terra needs to be printed to satisfy the need for the currency, a part of this newly printed money goes to the end consumers, which allows them to purchase products and services at a cheaper price. Is this correct?
Yeah, that's absolutely correct. So a analogy perhaps worth sharing is that of Bitcoin, because a lot of people know how Bitcoin works.
All right.
So Bitcoin has fairly limited supply, fairly fixed supply. So if the demand for Bitcoin goes up, which is what had happened over the past 5 years, is then the lever that moves is the price. So the price shoots up. And who benefits from all that? It's the early holders of Bitcoin, right? So early holders of Bitcoin obviously went from, $1 a Bitcoin to now $10,000 a Bitcoin, and lots of people became multimillionaires. What will happen with Terra is, because we fixed the price lever, we're actually changing the supply lever. And so in essence, the early holders of Terra, as Terra's economy grows, in the case of Bitcoin, should have made a ton of money, but we're actually diluting them by creating more Terra and taking that money, and we're redistributing that to users of the protocol. So what you described is exactly right. We're simply shifting the price and supply levers of Bitcoin by 90 degrees.
I see. And now you mentioned already that Terra is essentially pegged to a certain, like it's stable. So when you say it's stable, what is it stable compared to? When I read your white paper, it said that there will be different Terra cryptocurrencies, some that are pegged to fiat currency, one which is pegged to a basket of currencies. So can you elaborate a little more on this?
Yeah. So basically, we're going to have multiple Terras that peg to the local currency of the country that we operate in. So we launched our payment service in Korea. So we obviously needed a Korean won pegged Terra. So we created KRT, or Korean Terra. And we're soon to launch in Singapore. So we'll need to create Singapore Terra, or SGT. And our philosophy there is, I think lots of people in US, and I myself am American as well. But lots of people in US confuse the US dollar to be practically usable in just about any country. But if you actually get into, say, the e-commerce business in Korea, no e-commerce platform would want to be paid in US dollar and take the foreign exchange risk. They all want to be paid in Korean won. Everyone in Thailand wants to be paid in Thai baht. Everyone in Singapore wants to be paid in Singapore dollar. So the idea was that every country that we operate in, because we'll have significant liquidity pools through our e-commerce partners, will create a stable coin of the local currency, and we'll make them atomically swappable so that you can at any time, based on the FX price, swap Korean won to Singapore dollar to Thai baht to Vietnamese dong and so on and so forth. We'll have one kind of major currency called SDT. It's going to be the IMF SDR pegged Terra, which will serve as kind of the central lever, if you will, of all the currencies in our basket. But the idea is that the actual usable currency will be pegged to the local currency of the consumer.
And so at this point, you have already started Terra, right? It works. Your blockchain is live. It's being used. So I read that since recently on your team on e-commerce platform. People can actually purchase stuff with Terra.
Yeah, absolutely.
There is about what I read, 1,300,000 in US dollars amount of value that has already been purchased on Timon. Is that correct?
Yeah, that sounds roughly correct. Well, more now, I would think. Yeah.
Yeah. Okay. It's constantly growing. So what is the supply of Korean Terra today?
So we had some pre-mined supply of Terra.
Okay.
But you can essentially correlate the supply of Terra to the amount of circulating supply that should support Terra's demand. And Terra's demand obviously equals or is linearly correlated to the transaction volume on e-commerce as well as the Terra demand on exchanges.
So really the concrete number doesn't really matter. That's what you're saying. It's all algorithmically, mathematically calculated.
Absolutely, yeah. So I guess if you are curious, the way it actually works is we're always giving arbitrage opportunities to the market. So basically, if you deposit, say, $1 worth of, and if Terra is supposed to be traded at $1, but if it creeps up to $1.10, then you have a trading incentive to deposit $1 worth of Luna and get the Terra because you can turn around and sell that Terra for $1.10. So, and in that process, we've issued that new Terra that is being sold on the exchange, if that makes any sense. So that's how it works.
All right. And here you mentioned something that I think we mentioned for the first time in this conversation, the Luna token, which is also part of the Terra ecosystem.
Yeah.
So what is the role of Luna?
Yeah, Luna actually serves several functions for our ecosystem. So our blockchain is a DPoS blockchain, and Luna is the token that you buy and stake in order to participate in the validating activities. And if you stake your Luna, you are paid rewards in Terra. So recall that Terra is the underlying currency that will be used on e-commerce. And while we won't levy as high a transaction fee as 2 to 3% like Visa and MasterCard, we still will levy enough transaction fees, say, anywhere between 20 to 50 basis points to incentivize Luna validators. And so if you stake your Luna, then you'll constantly be paid Terra transaction fees as validation rewards. Luna is also the governance token. So Luna holders can vote on where the seigniorage is invested into. So right now, the only use case is really transaction on e-commerce. So it's all being spent on giving discounts to e-commerce customers. But later down the road, for example, if we're creating interest product with Nexo, then we can think about using seigniorage to top up the interest rate so that you're incentivized to save with Terra even more than what potentially Nexo's rates are. So Luna serves such governance function as well. And the last function that Luna serves is it collateralizes the Terra ecosystem. So we talked about the cases where Terra's demand increases and we're able to increase circulating supply of Terra. In the flip side, if Terra's economy shrinks, then we need to buy up Terra and burn it in order to make the price go back up. So we actually use Luna as collateral. And in order to buy up Terra and burn that.
And that is all super interesting to me. Absolutely. I cannot really wait to start accepting Terra, first of all, on Nexo as a collateral option and as a way for people to earn interest on that. Because of your model, this would make probably, the placing Terra there way more profitable or significantly more profitable than placing other stable coins. And how can people, if they want to then buy Luna? I know that you can stake Luna at certain staking service providers, but where can they buy it?
Yeah, so Luna is currently traded on a couple exchanges in Korea. We wanted to wait for payment service to launch to introduce Luna to global exchanges. And we've successfully done so about 10 days ago. So now we're closely discussing with global exchanges to make Luna more accessible.
Awesome. Sounds like you're really unstoppable, man. Like, I'm thinking at some point, obviously there's a lot of work to be done, but because of your inbuilt incentive mechanism for people to be using Terra, the Korean Terra, for example, over real Korean fiat money, is it possible that over a long enough period of time, we see the Terra stablecoin becoming actually replacing or becoming more usable than actual fiat currency in a particular country?
Yeah, I can totally see that happening because number one, we want to be ubiquitously accepted so that it's as good as the fiat currency. But number two, we do give back to the consumer ecosystem, which unfortunately is not the same with how politics works, right? So for countries, there's pockets of demographics that you need to satisfy. And, lots of the inflation and the country budget goes to satisfy that. Whereas for us, everything where every growth in the GDP of Terra will link to, discounts or kickbacks for the consumers. So yeah, I can totally see us being a very good alternative to fiat currency and stuff.
And so if that is the case, don't you think that certain governments might not really like what you're doing and may actually try to stop you or limit use of Terra in their jurisdiction?
Perhaps, but at least at the moment, we are completely compliant and licensed in Korea. So we operate under a e-money and payment gateway license. Singapore, where we're soon to launch, will be completely compliant. We have announced soon to launch product in Mongolia, where we're deeply collaborating with the government. So I think we'll find a way where, number one, we have enough passionate users who love our system and will support us to the government. And number two, we'll deeply collaborate with the government to find something that satisfies their needs as well.
All right. So talking about these discussions with the government and the relation between the real fiat and the Terra representation of fiat, would people be able and are they able today to convert their, let's say, Terra Korean money into fiat Korean money? So can they convert those from one way to the other? Will this be possible?
Yeah, so there's a couple ways that Terra works. One way is the traditional, you go on an exchange and you buy Terra and you sell Terra. And that's one way to fiat on and off ramp. The other way is we work with a payment app called Chai, which has integrations to all the major banks in Korea. So they allow you to on-ramp into the digital point and transact with it on e-commerce, just as you would on-ramp with, say, a PayPal or an Alipay. So, I think that also allows a seamless user experience without having to go to exchanges and set up wallets and store private keys and whatnot.
Now, another big topic I wanted to cover, which has been widely discussed through the news and throughout the whole cryptocurrency space, is Facebook's recently announced cryptocurrency Libra. Now, Libra, in a lot of sense, addresses similar problems that you're addressing, right? Libra is supposed to be a stable currency, just like Terra is a stable currency. Libra is supposed to be actually used for real world use cases, just like Terra is supposed to be. So how do you look at Libra as a competitor and how do you compare to them?
So first and foremost, I do think there's lots of similarities. The mission of creating a digital currency that is widely adopted across the world is a mission that Terra and Libra share. And the understanding that if you want to accomplish that, it needs to be done in the form of a stable currency is also a similarity, as well as we try to band together e-commerce platforms across Asia to help accomplish that. Whereas, Facebook obviously will be using their endogenous, WhatsApp and Facebook apps to accomplish that. So I do think there's lots of cross sections between Terra and Libra. And we somewhat saw that as a validation of the direction that we're going in. There are key differences. So there's obviously a geographic difference where, we're doubling and tripling down on East and Southeast Asia, whereas, WhatsApp is strong in obviously the Western parts of the world. We're extremely focused on the e-commerce use case. And obviously, if you look at a company like Stripe, there's lots of API suites and, developer integrations that need to be built in order to support the e-commerce use case. And I think Facebook obviously is interested in the commerce use case, but obviously it also needs to serve their existing use case of messaging and advertising. And last but not least, I do truly believe the reason why Terra works and the reason why we're able to get such early success is because of the seniorage model, because we're able to use growth and reinvest that to drive further growth. And given that Facebook is a plain old vanilla fiat-backed cryptocurrency, they don't have access to such a growth hacking model. And I do think that gives us a significant advantage if we're pitted against each other in the same market.
I totally agree. But it would be interesting because still, whatever you say, Facebook is way bigger than, I guess, your alliance. So maybe they can just bet on the scale of that they have deployed already. But it would be very interesting to see how things will develop.
Yeah, I think the same.
Yeah. So as kind of a concluding final note question, there's a bunch of stablecoins going out there. Terra is very different, obviously. Libra is in a way different, but there are all the other fiat-backed stablecoins. And there are fiat stablecoins being launched literally every month, if not every week. I mean, we have Binance, Coinbase, JP Morgan, Gemini, Facebook, like everyone is building up their own stablecoin. Like how far and how long do you think this will continue to be the case? Do you think that we will end up with one stablecoins, with a few? Because I don't really see the case where all the stablecoins that are popping up today will eventually continue to be usable for niche or for large scale audiences. What is your opinion on that? And how do you think this will evolve over time?
Yeah, I mean, I think the stablecoin from a trading pair sense, I do think will consolidate to a few stablecoins because only be so much more stable than the next stablecoin, right? Like stability is a binary condition. And if you achieve it, then there's really no differentiation point. So then I do think people will simply flock to the larger one. USDT happens to have, transparency and trust issues. And I think that gave way for new stablecoins to be born. Whereas if they didn't have those issues, perhaps they would have dominated the space. So I do think there will be consolidation. Having said that, again, the reason why I describe Terra not as a stablecoin, but a payment network is because I think we're trying to achieve something greater within a particular vertical. So we do want to be the friendliest partner to e-commerce, where it's very, very easy to integrate with dropping in a couple lines of code. And by simply dropping in a couple lines of code, we'll be saving them millions of dollars a month. And will also be a very well-liked product by their consumers. And I do think usership matters quite a bit in what we're doing. So we hope to be a payment network and a stablecoin that is among one of the winners. And, I truly do think we're building something that's very unique from all the other stablecoins out there.
Yeah, I think so as well. And now that you're saying this again, like it really is a no-brainer for existing e-commerce platforms to join Terra. I assume that almost any e-commerce platform, if it can save costs, transaction costs that it currently pays to existing payment networks, and if at the same time they can offer 5 to 10% discounts on their products, they would probably just implement it as soon as possible. Is it easy already for e-commerce platforms inside of Korea, but then outside of Korea, let's say in Europe, in the States, is your idea to kind of create a model where I have an e-commerce platform and I can easily plug into Terra and grow your ecosystem as well?
Yeah, so I think our sales hit rate has been phenomenally high. So I don't even recall the last sales pitch that we got rejected in. And and it's true, I'm not trying to be boastful here. And the reason is because we've created a value proposition that is so obviously addressing a major pain point that these e-commerce companies had, which is unnecessarily paying way too much money for credit cards. And obviously, the more efficient alternatives never got consumer adoption. So, yeah, we do want to quickly integrate within Korea, and we have great platforms that are in the pipeline to integrate. We do want to scale quickly to other countries. The only thing that takes time is we do need the proper licenses in each country.
I see.
Again, we do want to be compliant. We do want the proper e-money or payment gateway licenses to be able to play. So from that light, and in order to comply, we do need to change the model slightly in the respective countries. So that's the one thing that requires us to take time to get there. The only kind of pushback, if at all, we got from e-commerce was, okay, let's see you launch and let's see it in action because it sounds too good to be true.
Right.
But in 10 days on Timon, we already acquired 100,000 users. So I think lots of people are seeing this as validation that the model is going to work and are quickly calling us back to try to integrate.
Beautiful. Yeah, I think it can really be a snowball effect. Again, I can't wait to integrate for you to launch more stablecoins and for us at Nexo to start integrating those in our interest earning accounts. And we may have some other use cases that we can think of that further expand the adoption of Terra. Before we end up, I have just a couple of very short questions. I like to pay tribute to evangelists who have brought you or other guests that I have on the podcast into the cryptocurrency space. Is there somebody in particular that has helped you realize the potential of blockchain? Because as I understand, for you, it was not Bitcoin first, it was really blockchain and its potential.
Yeah, I mean, if the question is who kind of evangelized blockchain and crypto to me, I think there's lots of people who played a role, but the one that I want to give kudos to is Simon, who is the CEO at Hashed, a premier crypto investment firm out of Korea. You know, I met Simon when I knew nothing about blockchain and just walked in saying, hey, look, like Bitcoin is doing great. Like, can you teach me about the industry? And, you know, not only did he walk me through the fundamentals, but he really shared genuinely why he's excited about the space, why he's deploying the vast majority of his personal capital behind the industry, and why he's, you know, long on the projects that he's invested into. And through the peaks and troughs of the industry, he's really stuck to his genuine philosophy and belief. And yeah, I think Simon Kim, he's one guy that's really been super helpful throughout all of this.
Awesome. Then kudos to Simon. And finally, what is your strategy, your personal strategy for investing in crypto?
I personally don't actively look for investments because I'm busy enough building behind Terra. Having said that, when I do invest, I think I invest behind projects very similarly to how I evaluate, you know, startup tech companies, which is really looking at the team and seeing their passion for the idea, but also evaluating their ability to execute and really iterate very quickly towards a model that will blossom and scale. So, you know, I think lots of intellectual debates have happened in crypto and lots of white paper were written with eloquent language, but perhaps less thought was given to, okay, can they build a business? Can they execute? Can they iterate? And for me, as a serial entrepreneur, even from, you know, prior to the blockchain boom, that component is very, very important.
I see. So where can people find out about you? Where can they learn more about you and Terra?
Yeah, so lots of avenues, but Terra has a Medium account. So check out our blog posts, terra.money. Our website has our white paper and some of our newer release products, as well as we have a Discord room for you to come ask questions and chat in. And then, you know, last but not least, if you're in Korea, please try our payment app. And in Singapore, Mongolia, and other parts of Southeast Asia, we're coming very soon.
Awesome. Thanks, Daniel.
Thanks, George.
A couple of things before you take off. First, if you enjoyed this episode, be generous and share it with your best friends. They deserve it, they will appreciate it, and they will be grateful to you. Second, I want to draw your attention to Nexo, without which this episode wouldn't be possible. If you're like me and you believe the long-term value of crypto will grow, then Nexo might be a useful tool for you. The company allows you to get instant access to cash in 45 fiat currencies without selling your Bitcoin, Ether, or other crypto assets. In case you don't need a cash loan, Nexo can also generate you passive income, up to 6.5% per year on your stablecoins or euro. What's more, interest is paid on a daily basis, meaning you can add or withdraw funds to your interest-earning account at any time. Now you should know that the level of automation, convenience, and flexibility that Nexo provides are vastly superior to what any other similar service offers. This is the reason why I myself joined the Nexo team. Having said that, none of this is investment advice. I just genuinely believe these services might be useful for you. You can explore more at nexo.io. Finally, if you have any suggestions, feedback, or anything you want to tell me, you can find me on Twitter at borderlessbtc or my website on borderlesscrypto.com. Thanks for tuning in, and I'll see you soon again.